Hey, welcome everyone to another Intentional Success webinar. Today, we're going to talk about scalability. I'm a little excited because, well, I think this is urgent. I think it's very important, and I'm glad you're here to learn about it. This whole concept began 3 years ago at the beginning of the pandemic. We had an opportunity for a do-over. Though at this moment, 3 years ago, we were just now realizing what was going to happen, and we were just starting to see shutdowns. And I did the first, the survival series webinars on the pandemic. So it is kind of an anniversary for all of that, I just realized. But we've got a chance today for everyone who hasn't started already to rectify a lot of things that failed us when the pandemic happened. And while you can never pandemic proof ourselves, we can downturn proof ourselves. And that's a lot of what I'm going to talk about today. So I'm so glad you're here, because I think this is something we have needed for a really long time. For you new folks, again, welcome. I'm Tom Stimson. I'm president of Stimson Group. I am a business consultant, but I have spent 40 years in the professional live events industry. Been there, done that, and I pretty much consult exclusively with clients in that space, or at the very minimum in the professional audio visual space. I work with owners and, with their permission, their management teams, coach you to better results, change management, new strategies, whatever it takes. I'm all in with your business. So I hope we get a chance to talk about your business at some point in time. If you are new, welcome. This is being recorded, as you just heard. It'll be available shortly after this event is over. I'll get it posted, but you'll get an email at the end of the day that'll give you the link to the replay page. Questions, if you got a question while I'm speaking or I'm presenting material, put it in the Q&A box. I will see it. If it's appropriate at that time, I'll pause and answer it. Comments, hello, Randy from Toronto. Chats, anything you want to put in the chat is great. Say hi to each other, let people know where you're from. You know, if you're trying to source a laser projector for, April 2nd and 3rd, put it in there. Somebody's probably got it. It's all fair. It's all fair game in the chat. But questions for me to answer, go to Q&A. I'll be sure to see them there. So yeah, let's get started. So what it means to be scalable and why it's urgent. Okay. The pandemic was our do-over. We got reset. We got smacked down to zero, right? We went from blowing and going, great 2018, 2019, 2017, to zero revenue, zero income, no idea when it was going to start up again, canceled jobs, returning deposits, not getting paid for things that you'd done. Horrible, horrible things were going on. And we had a chance then to pivot and figure out how we were going to survive the pandemic, which all of you did successfully. But we also had a choice about whether to keep that pivot model, and instead of going back to where we had been before the pandemic when things let up again. So arguably, the business implications of the pandemic are mostly over. Revenue's back. We've been blowing and going for the past year. Profits are way up. We're at 2019 revenue numbers. At least most of my clients are there or far have exceeded it. And great time to make money. Some supply chain constraints. Yeah, is it hard to find employees and freelancers? You betcha. Great problems to have, but that's where we're at. So why this webinar? Why now? The lure, and I talk to business owners almost every single day, and I talk to my clients every week. The lure of going back to the old model is strong. The lure of, having a bunch of staff technicians because they're easier to schedule and we don't have to hunt to find them, and we can accept jobs knowing that we have people available. We want to own all the gear. We want to reduce our sub rentals because yay, job cost. That's a very strong lure. It's our comfort zone. And of course, it's going to call you back. Okay. The supply chain has been a little wonky. It's hard to buy new gear. A lot of things aren't delivering. Sub-rental wholesale prices have gone up significantly. Labor prices have gone up significantly. Things are still sorting themselves out, though I really do feel they've settled down quite a bit. And we're not always sure where we fit into this. Are we supposed to be, at this part of the value chain or at this part of the value chain? And scalability that we're going to talk about today is really the encapsulation of everything we learned by this pandemic smackdown. Okay. I don't want to waste what we've learned. So I've been struggling and diligently working to try and figure out how to present this to you in a way that everybody can get it and start using and applying pieces of it in their businesses right away if you haven't already done it. You can also build on the things that you've already done. Because I know many of you have taken some pretty major steps to keep your overhead down, to change the way you sell, change the way you deliver, to reduce your exposure. Good for you. We're going to take it one step further. Okay. Now, why is this urgent? Okay. Well, what I'm going to talk about today isn't for everyone, but I think it's for at least a third of my audience that this is something that you're going to embrace and you're going to want to do, because the event production segment that we're all in, wherever you fit into that, is going to end up with basically 3 levels of supplier. The solutions providers, okay, which are going to be the scalable organizations, the contractors, who are going to have a limited skill set, limited inventory, limited access to personnel, and then the wholesalers, okay, who are going to be everybody's supplier. And that could be a staffing company, that could be an equipment company. So those are the people who are actually delivering events into the venues. These are the 3 categories we're going to end up in. Solutions providers are going to make more money than contractors. That's all there is to it. And the distinction between a solution provider and a contractor is becoming very, very clear. The old model, most of us were set up as contractors, even though we felt like we were selling solutions. Oh, we have a creative department, but the fact is, from a business standpoint, how you made money, where your costs fell, what your obligations and overhead were very much a contractor style model. So this new model, which sometimes we call it the agency model, because it is a take on the agency form of business, which is outsourcing most of your direct deliverables, is you're selling solutions. You're not selling how you do it, you're selling what you do. Contractors, we're generally selling how we do it, right? And there's nothing wrong with that. It's honest business, okay? You can refine your processes and your techniques and your cost controls and be a fabulous, profitable, successful contractor, and that's fine. Today, I'm going to tell you how to be the solution provider and how to make that work. So scalability, what is it? Okay. If a business is scalable, what this actually means is that if I add an additional job, the profit percentage is going to increase. So if I've got $100,000 a month and I add $50,000, if I went from 8% net profit, I'm probably going to go to 10 or 12% net profit, because I'm scalable, because that additional job didn't require any additional overhead. Now extrapolate that over a year. If I go from a $4 million year to a $6 million year, if you are scalable, you actually don't have to add any overhead to do that in most cases. And my profit percentage is going to go up dramatically, because that extra $2 million worth of business has no additional overhead. All the gross profits drop straight to the bottom line, which is what we've always wanted. And if you're scalable, that's what's going to happen. Now, we don't keep the same overhead forever, right? We do add overhead, but we focus on 3 things. We focus on acquisition, which is sales and marketing, business development. Acquisition of new business is an overhead investment. Planning the jobs that you're going to execute is an overhead expense. Procurement, buying, hiring the people, the subcontractors, the outsourced equipment that you might need is another core competency that's part of your overhead. Now, we also have some admin in there, you got to have the accountants, all that kind of good stuff. But basically our overhead is limited to sales, planning, and procurement. Okay. Direct delivery is cost of goods sold. Now I can have permanent employees as direct delivery and cost of goods sold, but now I've got a fixed cost of goods sold, which is just another form of overhead. And we want to try and minimize, if not actually eliminate that. So fixed direct costs are going to be part of what you do, but I want to dramatically reduce the amount of fixed direct costs and trade them for outside costs, variable costs, okay, which are going to be favorable, even though I know you're panicked right now. In certain months, yeah, you would do better if you had inside fixed costs. Okay, if you look at your entire year, you're much better off having as little fixed costs as possible, fixed direct costs, and outsourcing as much as possible. And I'll show you why. I'll make a good case for this. All right. Hello, slides. So our pre-pandemic model, right? We own most of the gear. We employed most of our technicians. We outsourced only when we needed to because job costs drove all of our financial thinking. How can I minimize costs on this job? That's how we make more money, right? Here's what that company looks like. And as you know, I've got hundreds and hundreds of companies, and I've got financials, and I've looked at these things many, many times. This is incredibly typical. Most of us have a very seasonal business. Your peaks and valleys may not be quite as high, but this is not uncommon to have a peak month that is 5 times bigger than your slow month. Okay, so most organizations in live events have a spring peak. It may be April, May, it may be January, February. Your business may differ, your region may differ. And then they have a fall peak. It may be September, October, November. Everybody's a little bit different, but it's roughly like this. And we've got generally 2 peak months. We got 2 pretty good months. We got 4 months where we break even, and you got 4 months where you just lose. And it's those losing months that are wiping out all of the profit from those peak months. Okay. So this yellow line that you're seeing at the bottom of the chart here, and you're going to see this chart several times, you know, this is what we're trying to eliminate. Anytime this drops below 0, we're losing money. We've got to take the money that was above the line and it vaporizes, right? We need to find out what's the profitable way to run the business where we can shift this line up. So if we look at the numbers for this business, that chart that we just looked at, don't squint too hard. I want to take you to the highlights here. Oop. The highlight here is that it's a $15 million company, right? Total income for the year, $15 million. Variable cost of goods sold and fixed cost of goods sold. And this is a true direct cost accounting. You may keep your books differently. You may look at cost of goods sold as only outside direct costs, and you take all your inside costs and they show up in overhead. I'm saying if we stripped everything out and only put overhead and overhead, but cost of goods sold and cost of goods sold, you have fixed costs where the things that you have to pay every month, and the variable costs, which are the COGS, which only occur when you do an event. So that's going to be your overtime, your outside labor, your sub rentals, outside logistics, whatever it might be. And this company is running 67% cost of goods sold. Again, true cost of goods sold. Okay, 32% gross profit. They have 30% overhead, which traditionally doesn't look that bad. You'll notice that their overhead is not actually flat. It goes up and down. Okay, why is that? Number of reasons, not the least of which are payroll. If you do biweekly payroll, there are certain months where you have 3 payroll periods, and that messes things up. So an individual month may look bad because you had 3 pay periods in it. How many of you have dealt with that? None of that's actually important, because if that bothers you, you're not looking at your numbers correctly. But 30% overhead is about normal for a company this size in our traditional model. And again, this is the old model. So even though the variable COGS is only 55%, fixed COGS, okay, and overhead wipe out the profit in 8 out of the 12 months, okay? 8 out of 12 months, the profit vaporizes because of the combination of our fixed COGS and our overhead, which are traditional overhead, right? So $15 million company, $300,000, $400,000 of net profit, which is horrible. That's a miserable return on investment. And it's because your fixed cost of goods sold is fixed, and there's a lot of direct labor hiding in overhead. And the combination of those two things that you're having to pay for in months when you don't need them is what's holding us back. So in this particular example, $1 million of revenue in a busy month actually created all of the profit. The rest is covered, eaten up through overhead and fixed costs. We don't want to work the whole year and have one job determine whether or not we're going to be profitable. But this is how many companies have been running for a really long time. Okay. Now, we can look at that and say, hey, well, they just need to sell more, right? If we can get a couple more jobs, well, when are those jobs going to happen, right? They're going to happen in your busiest months because that's when jobs are available. So the idea that I can sell my way out of this isn't going to work. I'll show you right now. You think you're looking at the same chart, but you're now looking at the chart of a company, that same company who doubled its revenue. So we're now looking at $30 million of revenue. Nothing really has changed except the x-axis. It says 6,000 at the top instead of 3,000. So we've doubled our revenue. We doubled the fixed cost of goods sold because you know you want more technicians and more project managers. You know you're going to want to control more of those things because you're so much more busy. We didn't double our overhead because overhead does scale a little bit, but we did increase it by 85% because you've got, payroll, you got new salespeople. There's a lot of things. You have to put some admin, department heads, all of those things are going to go on there. Okay. So net profit might increase a little bit, and it does in this model. Okay. But the timing can dramatically affect the results. It's all gambling. One bad month and we're right back to 2% net profit or worse. So even though you doubled revenue, your results don't change much other than picking up a little economy of scale in your overhead. So here's how we look, right? We're still at 67% cost of goods sold because that's how you're designed to run. So 32% gross profit. Your overhead has dropped a couple of points. You make a couple more points on the bottom line. 4% net profit on a $30 million company is not going to impress anyone, right? Because out of that, you still got to pay taxes. You got to service your debt, okay? There's no money there for a new boat or vacation home or funding your retirement. And that's a shame, okay? Now, you can't sell your way out of this. So how do we fix this? Well, I've been consulting now for, it's been what, 16, 17 years. And here's the old school way of doing this. Okay, when we encounter companies like this that are struggling, we'd look at this and say, well, can we buy more gear and reduce our sub rentals? Can we hire more techs and reduce our cost of goods sold? Okay, can maybe we switch techs from hourly to salary, or maybe we switch them from salary to hourly? We've played all of these games, but we could move those things around. Maybe we can sell better. This is always true, by the way, certainly pre-pandemic, raise our prices in busy months, but oh, wait, what if we lose a big job? Then we don't work. Okay. So lots of things that we can try, but they're all very uncertain. They're still very much based on luck. Now, the one we always end up talking about is, why don't we just figure out how to fill in the slow months with new business? Well, they're slow months for a reason. You're in a seasonal industry. Unless you start doing different kind of work. So like, hey, we're always slow in July. Well, you know what? There's a lot of festivals in July. Well, we don't want to do festivals. I don't want my gear in the mud. I don't want, we don't do outdoor stuff. Okay. There's a reason you don't do festivals, right? So there's a reason you're seasonal. So unless you can magically get clients to move their events to different months, which we've seen a little bit during this pandemic recovery, we have flattened out our year a little bit, and streaming events have certainly helped. We still are fairly seasonal, and that's probably going to continue, because if you're in corporate events, well, there are times corporations don't like to do events in August because everybody's on vacation, right? What do we got to do instead? So we can't really fix the old model. We've tried. We can make minor improvements to it. We can put some cost controls in there. We can even outsource more and improve that model, but we're not fundamentally changing how we do business. Because in order to be wildly successful, and I will tell you what wildly successful is 20, 25% net profit. That would make me happy, okay? this is not out of reach, okay? But to do this, we have to dramatically reduce the excess capacity that you're carrying in anticipation that maybe we'll have a job fall into place that will make that month look awesome. It's gambling. I'm tired of gambling. I want you to focus on closing ideal revenue, and I want you to be built in such a way where you don't incur costs for business that you haven't sold yet. So the basic problem is we're paying for capacity all year long, but we only need it for about half of the year. So the new school solution, there's 3 mindset shifts I want to introduce to you, okay? To get to a more scalable model, to begin the journey, you need to reduce your fixed cost of goods sold, okay? When you do that, you're going to raise your variable cost of goods sold, because you've got to replace it somewhere. We still need the people on the jobs. We still need trucks. We still need gear. But I'm going to shift it from my permanent inventory of people and equipment and things and move it into an outsourced inventory. And you're not going to do this overnight. You're not going to flip a switch. Well, you could, but you're going to gradually do that. A seasonal business means seasonal costs. So I'm going to move these 2 components around a little bit and shift where those things are. And it can be as simple as taking a full-time tech staff and make them an on-demand tech staff that's effectively a freelancer. I don't care if they're W-2 or how you pay them. If they're on demand and you don't have to pay them when they're not working, it works, right? It's that simple, okay? We also have to look at optimizing your overhead, okay? Your overhead has to sell, plan, and procure. You need a little bit of admin. You want to manage the shows that you're doing instead of doing the shows. So if you have people on your team whose job is to go out on show site, okay, that person is a direct cost. Even if you use them in a selling process, okay, you probably could have outsourced that person. Now, there are exceptions, and I'll talk about a few of those things. It's okay to have some project management that's part of the planning that goes out and supervises the team, right? And we can recover their costs through revenue. That can still work, but an entire organization, no, not necessarily. And then the third thing we have to do is think about how we sell a little bit differently. Sell like an agency instead of selling like a commodity. A commodity is a sum of the parts and pieces. I add these pieces of equipment, I add these labor, I add these expenses. There's the price. Oh, you took away my margin. I want to do the job anyway because I need the cash flow. That's commodity selling. Instead, I want you to say, hey, I'm not limited to the people and equipment and assets that I have sitting on the bench waiting to be used. I can have a conversation about what my client needs and provide a broader scope of things for them, all of which are a profit center, all of which I can outsource. And if this sounds familiar, this is exactly what you were doing in the second half of 2020. You'd taken your 60 people staff, you'd laid off all but 5 people. You got the owner and their 4 oldest employees, more than likely. And you're doing streaming shows and you're hiring freelancers to come in and do everything. You're sub-renting the equipment that you can't buy or can't afford to buy. And you're listening to the customer that say, well, we need this recorded. We can do that. We need a website built. We can get that done. And you were taking on as much of their buy as they could give you. You were solving a lot of very valuable problems very quickly. And you did almost all of it through outsourcing, probably burning a little midnight oil, using those 5 employees until they got burned out, in which case we figured out how to outsource it. So we're not that far away from it. We just have to change our mindset. So to be scalable and seasonal works together. So now I want to show you the scalable version of this, okay? Notice the first thing you notice on here is that yellow line is now not below 0. It looks like it maybe hits it right there at the end of December. I am now building my organization to be profitable in my slowest months. Have you heard me say this before? This is what it looks like. I will accept a higher cost of goods sold when I'm busy so that I don't lose money during the rest of the year. Okay. The cost of goods sold is a little bit higher, but your overhead can be significantly lower. So let's look at the numbers for this and see how this changes, right? So I'm sticking with the $30 million version of this company because honestly, if it's a $15 million company, I have slightly lower overhead. My profit's about the same, okay, in terms as a percentage of revenue, right? I'm still going to hit 20% net profit. So I got a $30 million company. Remember, we were at like 68% blended cost of goods sold. Well, getting rid of fixed costs of goods sold and moving it into variable COGS was not a direct relation. I didn't take $120,000 every month or $240,000 every month and shoved it up into variable. I only moved it into variable when I needed to. Okay, so my variable COGS went up a few points, primarily in the busier months, right? So I already have a net return just by shifting cost of goods sold to all being on demand or mostly being on demand. No, this company's probably got a warehouse manager, maybe a delivery driver, and a couple of people in the shop. Good for them. That's fine. And I'll show you a model that looks like that. Overhead is about half. We're at 18% of revenue. We were at 30% of revenue before. Why? Because my overhead is optimized. And I also took out all the people that we throw on show site because they're available, because I have them on staff and I don't want to hire a freelancer. And many organizations are peppered with people who are really, they're just there because we know that we need them on a show several times a year, but they can do some other stuff in between, which sounds practical, except it's not. The numbers tell us we shouldn't be doing that. So most of the fat in your current profit and loss statement is unapplied cost of goods sold, hiding as an expense in your overhead. Extra project managers, technical department heads. Why do you need a technical department head? That's just a technician on staff with a better title, right? And you're putting them in overhead because they're a department head. Doesn't make any sense. So I know there'll be questions about that. And of course, put the questions in the Q&A box because I'm looking forward to answering them. Let me walk you through an example. Okay, and this is an example. I'm going to give you a real life actual from a real company, but I'm going to talk about what a planned transition is with the companies that I'm working with, and there are several right now who are in the middle of this, and this will be familiar to them. Here's what a planned transition to a more scalable model looks like. Does it need to take 3 years? Not necessarily, but 3 years is reasonable, and it's not too aggressive for most people. Absolutely, I want it to happen faster. Okay, that's me. I want to move fast. Year one, expect to reduce your revenue by 10%. Why? Because you're going to be turning down some work. Everybody who turned down work this year, it didn't kill you, did it? No, nobody died because you turned down work. In fact, it made you more scarce. It made you more valuable. It gets people to call you sooner. It's actually one of the best things we've ever done. We've never turned down work before because we couldn't afford to, because we needed the cash flow so we can make our lousy numbers work, right? So we're going to reduce some revenue. We're going to make that conversion from fixed to cost of goods sold. We're not going to do the entire conversion all in one fell swoop. Maybe through attrition and reorganization, we're going to gradually get the fixed cost of goods sold down to maybe just a warehouse crew and 1 or 2 folks. That alone is going to increase your net profit, probably double it, because that's a big chunk of what we're doing, but it's not the biggest chunk, because in year 2, we're going to get a handle on overhead. It will have started in year 1, of course. We're going to increase your revenue by 1.5 times, or a 50% increase in revenue, because we are becoming a selling machine, right? Because we are no longer going to be constrained by the availability of staff technicians and checking with the warehouse to see if we're going to have equipment, next July. The answer is yes, you are. So just sell the dang job. So we're going to change the way that we sell, and that increased revenue with our reduced cost, and I didn't add any overhead. Okay, I'm going to double or triple my net profit again. Year 3, I should be running 3 times revenue, because now you're a selling machine. There's no reason to say no to anything. Your biggest capacity constraint is going to be the ability of sales folks or the sales team to process opportunities, and project planning to plan the opportunities that you actually win. Okay, but you can process more opportunities than you actually do because not all opportunities are going to convert. So you'll find that ratio there, but hitting 3x revenue will be a lot easier because you're no longer living with the constraints that you've always had, which is inventory of people, inventory of rental assets. So now we should be back up to that 18 to 22% net profit where we should be, which puts you at, somewhere between 24 and 28% EBITDA, which makes you a very valuable company. And if you think I'm crazy, it's because you're younger than me. We did this all the time in the 90s. This was normal in the 90s. Running the old model of overstaffed, all technicians on staff, owning as much equipment as we could. Okay, we were doing 18, 20% net profit. That was the norm. All right. There's no reason we can't do it again. Oh, by the way, the companies that ran an agency model back in the 90s who were doing 30 and 40% net profit, they were cranking out some cash, right? So we have had 20 years of a de-evolution of the business model through oversaturation. We bought too much gear. We duplicated too many resources by everybody having staff. So we probably had 5 to 10 times more technicians on staff and more equipment on inventory than there was demand in the aggregate for the year. We staffed for peak. We bought equipment for the peak. And that drove our prices down because now everybody is desperate for money. Everybody was slashing prices to make lease payments. We know how we got here. I've written about this. You're going to get an email this afternoon that talks about this. Read the story. It's pretty scary, but we know how this happened. So moving over to the real life example, working with a client who I started working with them again in 2020. I'm sorry, in 2021. But in 2018, they were having great revenue, record-breaking revenue, doing 3% net profit. They had about 65 employees. In 2019, they grew another 10%, negative 2% net profit. They got up to maybe 70 employees. 2020 happened. We don't need to look at the numbers. It was all subsidized profit anyway. 2021, they got back up to 2019 revenue pretty darn quickly. And they moved up to 8% net profit. Why? Because they did it with 12 to 15 employees. They outsourced everything. Most of their gear sat on the show. Most of their work was streaming. They built studios using gear that they already owned, using labor that they had on staff to finish out. They made some modest investments, but they had a great return. 22, back to doing real shows, 40% growth. Okay, now they've blown away their pre-pandemic numbers, 18% net profit. And that's adjusted for any subsidies or any payback. That's real net profit that these guys were able to make. Okay, they did it with 25 employees by the end of the year, right? Same company, same warehouse. Okay, the forecast for 23, they shrunk it. Why? Because they can, right? They'll blow it out of the water, in my opinion. Okay, but they're still going to generate a 20% net profit, even by shrinking revenue by 30%. If they go back and hit the same numbers that they hit in 2022, their net profit is going to increase because that's what scalability means. So since they don't have to over forecast revenue to make their numbers work, they can under forecast revenue and be pleasantly surprised. And that's simply the choice that they're trying to make. Okay, this is a real life result. And I have other clients who next year they will be having these same kinds of results because they're halfway through that process. They're in the 2021 stage. So how different is it really? Let's look at the 65 employee company, and here's where they are now. Okay, I can't even tell you what those 65 employees did before, but they had technicians and project managers and salespeople who didn't produce squat, and ops people and accounting people. I mean, it was the Wild West, right? Today, they have a general manager, they have a business development person, they have no staff technicians, they have a small warehouse team of 4 people. They've got 3 people in sales who are doing 3 times more revenue each than they ever did before. And honestly, I've never seen salespeople say, I'm not breaking a sweat. We're cool. Give me more, right? They got salespeople doing, probably, $6-7 million worth of revenue when they'd only ever done 2 or 3 before, and they're fine. Got a creative team because they do a lot of creative and they do some scenery stuff. They got some project managers because they have some control. They can go out and run those crews. They mainly stay out in the field. They don't have a ton of downtime. And then they've got procurement, warehouse is a service tech. They've got procurement, sub rentals, purchasing. They got staffing, travel, logistics. It's about 7 employees, and they have 2 admin, a bookkeeper and an assistant. 25 people. 25 people generating 10 times 1,000% more profit than they were generating before. So obviously they use freelancers as needed. Before they never did. So they've dramatically increased their freelancer pool. They don't have people whose job it is to go out and do shows. They have people whose job it is to go out and visit shows to make sure that the people they hired are doing the job that they need them to do. So if you don't do shows all the time, you don't hire people who don't do who need to do shows all the time. We don't need that. So their project managers are managing multiple projects at the same time, not one project at a time. They're doing true project management, not job site supervision only, not being a lead tech only. They're not running the lights. They're not calling the show. They're making sure that all the jobs run well. And what makes this work, and this is where I've had to put a lot of thought into this process, is why is this working? Why is it working at my other clients? And it's working people who aren't my clients, by the way. We're not alone in all this. The key to making this work is that everybody stays in their lanes. When that company had 65 employees, and I have another client that's, probably up, 50 employee range, and they probably need to be down to about 30, people don't stay in their lanes. Okay. They're all over the place. They're trying to be all things to all people. They're wearing different hats every single day. Okay. Because they can't stay anchored to a job because, well, a show popped up and now they need to be on show site. So who does their job? Well, that's why there's 3 people who do that job, because there's never one person available. But on the busiest day of the year, no one's available. The shop is empty. You got the general manager and the accountant. They took the assistant bookkeeper and sent them out on a delivery. I mean, who wants to live like that? So don't wear too many hats on the pretense that this is saving money. And to run a company at this volume with 1/3 of the employees means you might need better people in some roles. And I'm going to say that carefully. You might need better people in some roles. Okay. So we can run a very successful business. We might pay those people a little bit more, but they're going to do the things that they do extremely well, and they're going to remove obstacles so everything else can happen. Now, when am I going to have overhead? You're going to have to add overhead. You're going to grow. And there's a point in time when you're going to grow so much that your overhead can't keep up. So if you focus on the acquisition, the planning, and the procurement, you look at where that constraint is and we add to fix that constraint, okay? The constraint I am most sensitive about is not acquisition or planning, it's procurement. And if I start getting backlogged in procurement, I'm not buying fast enough, we run out of freelancers, we can't find suppliers, I can't get a subcontractor on the other side of the country. We're thinking about buying gear because it takes too long for us to figure out where to rent it from. We got to fix that problem. Procurement is a profession. It's not an, oh, by the way thing. It's not a last minute thing. It's strategic. We do that in advance. We need to invest more in there so that we can do better at buying labor, travel, planning logistics, equipment movements, getting subcontractors on board. Okay. If we're struggling with the planning phase, we've sold a job and we've got to get it set up so it can be operationally serviced, make decisions about who to hire, where should the equipment come from, how we're going to flow things, normal stuff. Okay. We want to fix that backlog too. And then ultimately, if planning and procurement are clicking along, okay, and they can handle more volume, then I'm going to look at adding sales. Right? And it might not be adding account managers, because account managers react, they don't get new business. I probably need to invest in marketing or business development to drive new opportunities in there. And you'd be surprised how much more volume your account managers can handle if they are not tasked with micromanaging costs that they have no control over, or waiting for somebody else to produce a quote for them who's on a show side and can't look at it until next week, and all the other silly things that I hear about in companies that have 60 and 70 employees, but they can't get a quote out the door because the people they need to do that are actually working on a show. Sound familiar? Yeah, I was in your meeting last week. So how do I get started? Okay, here are the baby steps. The first thing I would tell you, if this is making sense to you and you want to figure out how to be more scalable, the first thing I would tell you is check your pricing. If you're going to become an expert at outsourcing, you need to be an expert at costing. You have to know what things cost so you can add margin to it. So if your pricing doesn't deliver you a good profit, if you outsource it, in other words, if it doesn't take into account replacement cost plus margin, fix it. Okay, you can't go wrong. Hell, you put 2% to the bottom line just by fixing your pricing and put some reasonable margins on it. Even if you don't have to outsource it, you're getting more money for it. Okay, then we're going to look on reducing the internal cost of goods sold, or the fixed cost of goods sold, and moving more of it to external. You know, you may have some technicians that would like to be a freelancer, want the change in lifestyle, like the idea of getting a higher hourly rate, but working less. You know, that's one way of looking at it. You may find that there's things to outsource. I probably, unless I was $100 million company, I probably wouldn't have full-time service technicians. All right, I would find people who come in once a week, work on the pile, right? You only use them when you need them. Then I would focus on optimizing my overhead for the selling, planning, and buying model, right? Am I optimized for that? Do I have sellers way down in the weeds into planning? How do I stop that? Okay, do I have sellers who are worried about how we're going to execute it rather than just selling it? Is my planning team able to be creative about how we plan things so that I can do some smart buying and buy far enough in advance? So I need some dedicated people. So this is about anchoring people who might have been out on show site before. So anchoring people is a major mindset shift for many of you, because you're used to that person being billable, and we're going to save job costs by sending them out into the field, and we can worry about fixing the rest of this stuff later, which means it never gets fixed, right? And then the fourth thing you need to do is learn how to turn down work based on your understanding of planning and procurement availability. You need to be able to say, we can't service that. Yeah, that'd be a sweet job, okay, but I know the limits of my supply chain, and we don't want to take that responsibility on. Now, you can elevate yourself to a higher agency level and take on that work and find a subcontractor, which is another form of supply, which means that you need to set up your buying system to include turnkey subcontractors, okay, which is also something worth considering. Easiest way to try this out, I talked to a young business owner, fairly new business owner last week, and he described driving a van from Florida to California to do a show, to get his equipment out there. And I asked him what it would have costed to have subrented that equipment out there, and he just flew. And he didn't know the answer. I said, well, that's what you got to find out. Because I know that he spent $3,000 driving across the country, and I know what his package was, and he probably could have rented it for $2,500. So we need to do some math, and we need to not just assume that because we used our gear, we saved money. If you spent a week in a truck and then you did the show, and look at all the other things you weren't getting done while you were doing that. So there's always some middle ground, right? I may not bring you fully over into this highly efficient, I can do $30 million with 15 people model, okay? But I can get you some of the way there, okay? Maybe you keep a little show technical team around to maintain your show identity. It makes you feel good, where you've got somebody who's really versatile and they're not super expensive, and you want to keep them around. You'll find ways to keep them busy. That's a middle ground, right? There's going to be some choices here. And we own our business because we want to do things our way, and that just might be your way. Okay. I would say, hey, I want to keep a few more staff PMs until we have this under control, because I always want to have an employee on show site. I'm not sure I trust freelancers to be the only face on my show site. Okay, well, fine, we can do that. Okay, there's a hit to your bottom line, but if it makes you more comfortable, that's a fair middle ground. Owning core equipment and subcontracting long distance shows or things that you don't want to own, that's kind of where you've been. Maybe you don't replace equipment as quickly. Okay. Get a longer life out of it and subcontract it when you need something specialized. But we can certainly be more creative about making our core equipment go farther. You know, very often putting your core equipment on a truck and sending it out for 2 weeks to do a 3-day show may not be the best choice when I can hire equipment for a 2-day rate wherever I am. But at the end of the day, you be you, right? Find the middle ground that works for you, apply some of the things here and see what works for you, what makes sense. And you'd be surprised at the results. But if you want to realize the full potential of this, I've got an offer for you. So while you're getting some questions ready, and I see a couple in here already, but please feel free to post questions, because if I've ever a webinar needed some questions asked and answered, this would be it. So now's the right time to do that. While you're thinking about that, yes, I am going to do a workshop on scalability. I'm going to do a masterclass on scalability. And a masterclass is only for the owners or principals of an organization. Right. And I'm going to do this on June 13th in Orlando, right before InfoComm. Networking, thought leadership. We did one last year that was highly successful. I'll put the website link in here, and you can go take a look at that right now and learn more about it. You'll get an email. The promo emails will start for that later today. You're the first people besides my current clients to actually find out about this. Last year, we did this on exit strategies and succession planning. It was a huge hit. This year, the most important topic is scalability. So I'm looking forward to seeing as many of you there as possible, or as many of your companies there as possible. So a little bit of the what and why of we're doing this, you know, that core team of people, how we're going to optimize them, what are the tactical things that we need to do to deliver the results that you want to deliver, but we want to maximize that profit. We're going to drill down into the tactical solutions and the things that you're going to have to do for this. We can answer those nitty-gritty, you know, down the rabbit hole questions in a small group like this. There'll only be 25 or 30 people at this event. That's what I limit it to. We're going to hear about what life is like after the transformation. The owner of the company who was in that anonymous case study will be there, and he will speak to that. I have 2 other clients that will be there. We'll talk about their life in the transition period as they're working on, you know, they're in year 2 or starting year 2 of the process. And you can learn from them what they have learned. And you can't imagine how awesome the questions are when I have just owners in the room. These guys will ask anything. Everybody's open and sharing. It's a really, really cool environment. Very, very proud of what we were able to do in last year's masterclass. And I know we're going to do it again this year. So it's a half-day program with a wonderful networking cocktail hour and dinner to follow. It's, like I said, only open to owners and principals, and you have to apply. So you have to contact me. I want to know who's coming. I want to approve that. Then we'll get you registered and get you on your way. So you've got the link there. You'll take a look at it, watch the emails. I got some great content coming out to talk about this more. This is really the basis of my next book. But another reason why this is becoming very high on my priority list is we've got to understand exactly what we're doing so we can write the book on it while it's still super valuable to my audience. Next month's webinar, we're going to kind of continue on this theme about how to be profitable in the new world order and our new normal. And we're going to learn how to write a proposal that isn't about price. And how in the world am I going to do that? You know, it's possible to write a proposal without a number in it. And we'll talk about that extreme, but we focus far too much on pricing in our proposals. What we need to be focused on is budgeting. And we are so hung up on the transaction being one transaction. And that pulls us into a pricing situation. I'm going to help you get out of that. I'm going to help you change your thinking about how we make money and how the customer perceives it, so we can meet them where they are, maximize their spend and your profitability, and give you the flexibility you need to avoid scope creep, but add scope and revenue as needed once the project starts. Any webinar you would like to see, including this one, will be on the Intentional Success Network, as well as all the old blog posts and everything. It's the archive of everything I've got out there. There are things that are not on my website, like older webinars, that we only keep the current webinar up for a month before it's replaced. But you're the inside track. You're my crew. Everything is available to you, but it's over at ISN. So join up there. It's free. You can mine in there. You probably find people that you need to contact with, but basically all the content, anything you want to revisit is probably there. And I was asked to, Tom, can you better explain what you actually do for your customers? All right, that's fair. I probably don't explain what I do for my clients as well as I should, but you guys deserve to better understand that. I can break it down into 4 very simple things that we do. The first and foremost is we do a business assessment. I look at an organization, I understand where you're at, and from there I can build on any question that you might have. By doing a little due diligence on and background on your business, following an order through the system, talking to your some of your team members, now I'm very well equipped to have a conversation with how do we solve this problem? How do we get better at this? How can we take on this strategic opportunity because I understand your business? It'll also give you a good assessment as an owner of what you need to work on, or even maybe what's the value of your business if you decide to exercise an exit strategy at some point. From there, we do strategy and road mapping, which is basically taking your goal and using the information from the business assessment and say, okay, given your goal and given who you are, what's an appropriate strategy for your business to grow or make more money? And then what's the path or the next steps to get there, which is the road mapping. Once we're past road mapping, we're into implementation. I'm there to give advice. Okay? I'm not doing the work for you. You're perfectly capable of doing the work, but you're going to have questions and you're going to hit roadblocks and you're going to have debates and discussions. You're going to need tools to figure out how to do things. And I give advice. And that's what I do most of my days. I advise people on roadmaps that we've already determined. And then within that process, I also do management coaching or owner coaching to help those individuals who are struggling with implementation or their roles or their next steps to better understand how they fit in and how to be more effective in one-on-one coaching. So that's what I do. And like I said, I do it primarily for the live events industry. Yeah, I do some keynotes and there's an occasional project in there somewhere, but this is what I mostly do. And this is why you're my audience. And this is why I talk about the things I talk about, because I'm learning as I work with each client over these years, as we would approach 18 years, 17, 18 years of doing this. We're learning a lot as we go. And I share as much of it as I can with you. But when it comes to actually putting into place, sometimes it takes a little bit more time and attention. So keep the questions coming in. Summary. So the key to scalable results is pretty simple. Lower your overhead, outsource as much direct labor as you possibly can, and learn how to turn down work. Okay. If you can master these things, then you will get to that scalable result that you need to have. It's not as terribly complicated as it sounds, because you can lower your overhead, you can outsource direct labor, and you can turn down work. And that will improve your results, optimize the income that you have to help you live a better life, fund your retirement, buy a new boat, do what you want with your money, bonus your employees, whatever makes sense to you. All right, let's get into a couple of questions here. Okay, got a few more minutes. All right. I need to find the big question. I know somebody will have asked it. All right, this one's pretty close. We've defined ourselves as the best people in the equipment. How does that work when everyone is freelance and the gear comes from other companies? All right, that's the question I was looking for. There's a couple versions of it here. I like this. Look, you have the right people and the right equipment. That's what matters. Where they came from isn't. But if it's important for you that those people and equipment are within your brand, then that is your choice, okay? It makes it difficult to optimize your fixed cost of goods sold and maximize your profit, okay? But if that's what's important to you, you can do it. However, if you believe that scalability is the right approach, okay, then reconsider how you position your freelancers, okay? They can be part of your family. They can be part of the team. They don't have to be on your permanent payroll. It's really not that different, okay? You can brand your core equipment and learn to live with sub-rented projectors. Who cares? You do it already. Clients see sub-rented equipment on your jobs all the time, right? It doesn't bother them. Nobody questions it, right? The problem is with how you identify yourself, right? And if you can identify yourself as a person or a company that gets the right people and the right equipment in the field to meet the client's needs and expectations within the scope of work, then you can be a little bit more agnostic about where it all comes from, okay? So at the end of the day, you're going to have the same gear and the same people on show site. Where it came from is probably not as important to your client as it is to you. So your perception, your mindset have to shift for this to work, and not everybody's going to make the move, and that's okay. The details and mechanics of shifting organizational focus and the processes that you will use, we're going to dive into that more at the masterclass. We'll get down to some of the brass tacks and variations on that, and you can apply them to your business, and you can ask other people how they're doing it or how they would do it. We'll go through some exercises. You'll experiment with some different ideas. It's a pretty eye-opening experience when you have a room full of people who have shared experiences and shared goals, and you're going to work on scenarios together. So next question. So how are other companies hiring freelancers? Okay, expecting this one too. Look, we can't seem to find any. Depending on where you are, you're going to have varying challenges in your marketplace to find folks. I have clients who have to fly people in to do simple shows because there's just simply no freelance talent that they can find within their geographic region. The quick answer, and these are not plugs for these organizations, they're not paying me to sponsor anything, but here are the 3 places where I send people who are trying to deepen their bench and find new sources for folks. Mertz Crew is great. It's a great payroll system. It's a great way of paying freelancers if you're trying to avoid nexus in certain states. They also have a great list of folks, a lot of professionals there. Lasso Marketplace is working for a lot of folks. Great list of people there. You can try folks out. If you don't like them, don't use them again, right? Tempo Live Events is a staffing company that works more at the professional and the production level. They have people what I would consider higher end client management people, floor managers, backstage managers, graphics people, designers, as well as technical people that do jobs. A nice pool of folks with the diverse set of talents that we need to do bigger shows. And then the last thing, of course, is always referrals. You know, if you have good freelancers, they should be referring better freelancers. If they are not referring people who are better than they are, then they weren't a good freelancer, right? But most of your freelancers come from referrals. If freelancers are not coming to you asking to work for you, that's a you problem, that's not a them problem. In which case we need to have a conversation about what it is that makes you unattractive to professional freelancers, or why do you only seem to attract people who aren't very good but charge a lot of money? Okay, that's a fixable problem, but there's a lot of self-awareness that comes into play there. So that's a good thing. So yeah, another question here about, you know, what are some of the labor sources? Yeah, these are for these are like, you know, pro AV type labor sources. If you need stagehands or whatever, again, this is about cultivating the suppliers. I would find somebody to source for you rather than trying to get them yourselves. You know, again, professional procurement. You know, my labor coordinators right now in the companies I work with, if they need 8-man stagehand crew, they're ordering 12. That's your cost basis. If 12 show up, great, we'll get the show set up faster. Or we'll get over the fact that 4 of them don't know how to do anything useful. But if we have 4 no-shows, at least we have enough people to build the show. So professional procurement is going to make a big difference in your life. So building up that bench is going to be really important. to make all of this work for you. So any other questions here? A lot of the questions are pretty much the same. What kind of processes? This is in the chat, Rob noticing 8-hour days versus 10-hour days. Yeah. Wake up call, everybody. California AB5, 8-hour days. It's moving across the country. I highly recommend to my clients to start selling 8-hour days instead of 10-hour days, start charging overtime after 8, which means you're basically charging an 11-hour day. One, you're instantly more profitable because you just added an hour of charge that wasn't there before. But that's the reality. If I were a freelancer, as I was for many years, I would be charging an 8-hour day with a 2-hour overtime minimum. I would charge you a 10-hour minimum based on an 8-hour day. This will also help keep you out of hot water from Department of Labor if somebody comes in and classifies these as employees. So there's a lot of things to think about in all of this. Your labor costs have come up. This is your cost basis. You need to adapt, right? And I would get ahead of it and start switching to an 8-hour day, and that will make a huge impact in your ability to deal with this. Your customers have no idea why you do a 10-hour day. Unless they're an old agency producer who's been in the business for 30 years like me, they don't know where a 10-hour day came from, right? They've been paying 8-hour days to union people for all these years. Many of the staffing companies are an 8-hour day. 10-hour day is just something we made up to make our numbers look better and try and capture a little bit more money, but then you end up paying it out. And what are they doing about requiring freelance labor to have a certificate of insurance, business licenses, etc. Talk to Mertz Crew. That would be a great place to start, or even Lasso. They've got some reports about this. If they can't provide you a certificate of insurance, business license, all that kind of stuff, then you just put them on W-2 payroll, right? Because they're technically an employee and there's no way for them around it. And if they don't want to do that, then you have to ask yourself, well, why? Who are they hiding from? Who have they not paid, a settlement to, or child support, or what lawsuit they're hiding from? I'm not saying that they're all nefarious. Some of it's just a matter of pride. But if you're going to be a freelancer and run like a business and want to get paid like a business, then you have to be set up like a business. Now, hiring an employer of record, awesome. Do that. Okay, get away from some of those issues and you'll eliminate those problems. So there you go. Hey, I'm out of time. And you're probably out of time. Get back to work. I look forward to more of your questions, and we will get on down the road. Watch your email, learn more about the masterclass, and please forward that to whoever you need to in your organization. Thanks as always, guys, for being here. You've been awesome. We will see you next time.